Hello everybody, this is Bitcoin Macro, and this is the fourth video guys in the mini series that I'm doing about this correction on how to spot tops and how to spot the bottom and where it could be going next from here, what lies ahead potentially for the market. And I've analyzed all the stuff regarding the top. There was probably more stuff to be said about it because there was a lot more information, at least at the time. Now with the bottom, I've just gotten a lot of questions on how could have I seen it. And the truth is that you can't really see everything ahead, okay? However, you can use certain tools to kind of estimate where things could be going and just take it step by step. Because for example, I initially expected at least 38K to give us a bounce, but the way we got there, because I was looking ahead, I was like, okay, we're gonna go there, but what's gonna happen then is just something to be determined. And after we got there, the crash was what actually followed. And the truth is that there were some signs for the crash, because the main thing was that funding was still high. It had not gone negative. We hadn't really seen a crash on the open interest. We hadn't really seen a crash of longs. There were still too many longs in the market. So that was kind of a big signal to me that there was more coming. Now, maybe there's still more coming now, but I'm just going to talk about what could you have done potentially to profit from this crash, or maybe what you could have done to avoid certain things, because I did mention all the stuff regarding the top, but I'm just going to start with a TA on this one. So I'm going to go about a little stuff for the top, how you could have measured certain moves to see where the price could be heading, some key indicators to play with in case you want to find the bottom next time. Maybe we're still in a bull market, maybe not. To me, it doesn't really look like we're still in a bull market, but I would expect the price to maybe still go a little higher relatively soon before it goes lower. Now, the first thing that I would say is that we certainly had a lot of information that the market was reversing. No matter how you slice it, no matter how you look at it, it was essentially like the diagonals were getting broken, the trend was reversing, the trend was slowing down. There were some signs right here where we were trying to make new highs, but every time we were trying to make new highs, we kept failing. Then we started making new lows. We also had that major pump that was not properly reversed. In my opinion, we also had a little bit of a situation here where the market didn't fully correct back then, so there was not a proper shakeout. So essentially what happened was the weak hands stayed in the market. So because we had so many weak hands all the way up here, we have to shake them out now, or at least we had to shake them out because potentially the shakeout is over. So the main area, like I said before, was 38K, and that was the main target. But what happens if your main target doesn't really support the price? And I think many people actually expected something similar. Maybe that was their initial target, which wasn't really that bad of an idea, but because of how the market played out up until that point, it did change the dynamics significantly. So the other thing that I would just say is, if I zoom in a little bit and I go onto a different time frame, is that we started breaking some key support levels after testing them several times. And one of them is 47, 46K, because we touched this support level many times, guys. And after touching a support level many times, we do kind of know that a breakout will follow, a breakdown will follow. And when that breakdown comes, you do expect at least a bit of a measured move to the downside, maybe something like this, or maybe something like this. So essentially what you do is you take this, because again, you can look at a lot of the patterns, the classical patterns, which you can analyze, maybe because you think of this as a flag or as a pennant or anything, or just as a double bottom. But what I like to do, rather than going too much in detail as to why these classical patterns are, how they work and so on, I just like to just use these things as a little bit of an estimate, because what happens is I usually do expect maybe the price to do something like this, okay, to just fall as much as it had fallen initially. So it's essentially like an ABC move, AB equals CD move, excuse me. And that's what I'm looking at right now, or maybe something like this, or like this. So essentially what this is telling us, was that maybe the price could have dropped anywhere from about, let's say, 34k all the way down to 28k, which is what happened on some of the perpetual swaps. Some of the perpetual swaps fell all that way down there, and I'm going to analyze that situation as well, because I want to talk about why there are all these discrepancies between perpetual futures and the spot price, which is very important as well. But for now, all I would say is that this crash wasn't totally unpredictable in a way, because so far we just kept dropping with all those flash crashes. So once you see one or two of them, you do kind of expect maybe a third one to follow until you properly have a full shakeout and the longs are really gone. Because if the funding remains the same and remains like positive, and you know the longs stay elevated where we had 2-to-1 long to short ratio or 3-to-1 long to short ratio on some exchanges, that's not a good sign. That's definitely not a good sign, because it's telling us that longs are still dominating. But that's again for another video. So at least for now, what matters to me is that we have that big drop and we have completed most of the correction. However, usually, like before, I was expecting minimum of about, let's say, not say minimum, I say maximum of about 40% correction. Because usually, at least on the 2016, 2017 bull market, 40% corrections were more than enough for the market to shake out the longs. However, this time around, we do have a lot more leverage. So maybe this move has just been to shake out the excess leverage. But here's the thing. If you look back on most bull markets or most big runs, whenever you had a correction that was way larger than the average correction at the time, then that was the end of the bull market. So even in the 2019 run up from 3k all the way up to 14k, usually the corrections were up to 25%. But once the correction was about 40%, or 35%, excuse me, then that was a signal for the end. And at the same time, here we clearly have proper lower highs and lower lows. So that was not a good situation to essentially play support, because it just didn't act as one. Now, the other thing that I was looking at least at the time was maybe the 200-day moving average would have held the price. And I'm looking at it with this way, with the 1200 MA on the 4-hour, because that's essentially representing the 200-day moving average, because we've got like 4 times 6 hours in a day. That's why I'm using this one to estimate the price, the 200-day moving average. And my estimation was that we would drop a little bit below it to maybe make some people panic and then go higher, because up until now, the 50-day moving average held the price for so long. That was not a good sign, like I mentioned in the previous videos. And once that broke, it went much lower. However, I just expected this one to hold at least for a little bit. Okay, I expected this to hold for a little bit. But once that broke, the next one, guys, is the 300-day moving average, which this one actually held the price perfectly. Now, if we go back and look at the 300-day moving average, at least historically, on some occasions, like this one right here, that was actually when the top came. Usually, the 200-day moving average and the 300-day moving average should not be touched that much in a bull market. Maybe not at all. Okay, because we want the strength of the bull market to continue to be intact. We want the bull market to just continue going higher without piercing those moving average, because this is not a great sign. Now, maybe we're in a very similar situation with this situation back here in 2017, in June of 2017, around 3,000, where it dropped down to 1,700, 1,800. And maybe this time around, this is different because of the leverage, okay? Or maybe it's different because back then we had Segwit Pass, so that was a very big thing for the market. At that time, the alt season was massive. It was actually a bigger alt season relative to Bitcoin from the one that we had just now, or that we are probably still in, maybe. I'm not sure. At least I believe that maybe it's Bitcoin that will rally now if it's still in a bull market. But the key thing to notice here is that From the bounce right here on the 6th of February of 2018 from about 6,000, the market almost doubled and went up to 12k. That was the main thing right there. So it bounced all the way up there and then kept falling lower. So to me, the fact that we touched this moving average is not perfect. Maybe you want to see it here as well in October of 2019, where it had that bounce on the 300-day moving average. The price bounced and then fell lower. Now, of course, at the beginning of the bull market, or at least the main stage of the bull market after the COVID crash, we did touch it and then went much higher without touching it again. And then, like I said before, if you start measuring the moves, for example, from the 2017 top, we dropped 70%, whereas all the other corrections were about 30%. But it's not only that, like if you notice the first main correction that was down to 10k or about 11k from the 20k top, that was 47%, which was way more than the average correction back then, which was about 40%. And that was the main top signal. And again, this time around, we've only corrected anywhere from 15%, 20%, and let's say the maximum was in January about 32%. So currently, we've had the 55% correction, which is much larger than all the previous ones, which is not a good sign. However, having such a large correction, at least in my opinion, could lead into a further bounce. We have already bounced significantly, because going from 30k all the way up to 42k is about a 40% bounce, and this is pretty massive. However, like with most other crashes, we might see the market go a little bit of sideways first and then continue higher, because at least to me, to expect something to go up so quickly might not be the best thing after such a correction. Because even if you look at the March crash, because this is potentially the other phase we could be looking at, where the market dropped about 55% in just a day or maybe 2 days, depending on how you want to see it, maybe in less than 48 hours. And it was actually about 60% from the top, at least from the 10.5 top, 10.5k in February. So after that correction, it took some time for the market to properly adjust and go up. So I wouldn't be surprised if we play around the 35k area. And the reason for this is that we have the volume profile, high volume nodes. So if we have a look at that one, what happened was we have the first reaccumulation in this area, and then we have the area where the market started distributing essentially. So below 44k, the market was still bullish. Then above 44k, the market started getting bearish. And the other main target that maybe someone could have had by looking at the chart without looking at moving averages would be about 34k. Okay, because that's the next high volume node that was never retested, because the market started going higher and higher without having a pullback down to that area. And that's why you can see that when the market started pulling back down after the big crash, that was the area that essentially found support. Now, again, on some exchanges, you will see different things, but on Coinbase, it almost got down to 34, 35k and then bounced again. So the volume profile was also potentially a place somebody could have started buying. Clearly not perfect. You can't really estimate, like I said before, the exact perfect bottom. Maybe you could have had some bids on the 300-day moving average, but in my opinion, even having some on the volume profile right there wouldn't be a bad idea, because essentially that was where the Tesla pump kind of started, when Elon Musk actually got in. When they started buying Bitcoin, they started buying around that area, and that's why maybe the price could have found some support right there. So other than that, I would just mention a few things about some key pivots. Potentially you could have bought on the S3 weekly, which is also a great place to look for support. S3 weekly is a great indicator to buy a dip. Also the S3 monthly was one indicator that I was looking at, but unfortunately it kind of broke. And that was part of the reason that I thought 38K was going to be extra good support. It was a nice support combo with the 200-day moving average, the horizontal support, plus the S3 weekly. But once that started breaking, clearly we had a very, very big drop. Like as you can see here on the 1 hour chart, once the market broke below S3 on the weekly, it didn't really close below it. And that's a huge sign of support. Then you can see that it touched it once again and then it bounced. So you don't really have to just buy when it drops. Maybe you do want to have some bids all the way down there. But for you to kind of think of buying, let's say with leverage or anything like it, you want to see some strength first. So Coinbase came all the way back to that resistance level right here, which was also the all-time high around 42K. So far, the market hasn't really managed to close above it, but we're also closing above S3. You can see that S3 has turned back into support, which is also a good sign. So maybe after you have missed the big drop, you want to be looking at some of the key pivots so that once the price is kind of gone back above them, you want to start buying, because when the price is really below those key pivots, that is a sign of the market being really oversold. Now the market can get very, very oversold, but once the market hits those pivots and goes back above them, then that's usually a sign of strength. Now, of course, that's for the market being bullish, but you can see the same thing in a way in the other side. So for example, I have here the yearly pivot, the R3 yearly pivot, which is the last pivot that we have essentially, and yearly pivots are much stronger than the monthly or weekly, at least that's a general rule, let's say. So here's the thing, once the market go above that R3, the market started doing pretty well. Okay, that was a very nice sign of the market being very strong. And although it was overbought, it kept going higher. Once that broke, here's what happened. You lose that key pivot. The market was really based around it. It was doing very well. It starts crashing down. Okay, now another example, and I'm going to look back on the 2020 crash, because I think I can find some very nice information right there as well. We can look at the other pivots too, and if you have a look back then, once we lost the yearly pivot back then around 8K, the market crashed. It really crashed. The same way we lost R3 this time around, which was acting as support. Once it was acting as resistance, we really fell all the way down to S1. And other times, like if you're looking for a crash, what else you want to be looking for is areas like this one that haven't been retested. Now the 42K area this time around could have been like this support, but because the market was in a very different state and in a very different situation, that one actually failed to act as support. So the market actually fell all the way down to a level that was actually broken by a little bit. So the market didn't really exactly bottom right there. But once you see areas that act as resistance for quite some time and they get broken very violently, and then they are never retested for, or at least they don't get retested for a really long time, then eventually we do get a pullback into that area, and that's the best area to be buying, or maybe selling on the other way around. Now, of course, you can also start buying after the market stabilizes, because as you can see right here, we got a lot of chop right after the bounce. So maybe you can think of this area around 6K on the chart on the 12th of March as the 42K level. And then maybe we can see the market dumping back all the way down to 34, 35, or even 33K before going higher, if we assume we're still in a bull market and in a similar situation with that flash crash back then. So again, guys, the pivots can be very useful so that you can spot some key areas to buy. On this one, maybe you could have saw the R1 as well as a pivot. Usually I don't really use them as support. I only use as support either the yearly P or the R3, but once R3 gets broken, to me it's very clear we're in a full full bear market again, and it's just something to keep in mind. Usually I just use S3 and R3 because at least for the weekly and the monthly, they are a lot cleaner and a lot stronger, and I don't really want to play too much in between. In my analysis, usually they are the strongest, so I don't really want to waste too much time with the rest of them. Now, finally, the other thing that you could have seen on this chart, at least regarding the TA, is this support right there. So that was a support block. Now, in my opinion, the fact that it got tested again is not a great sign because it could potentially get broken eventually. I don't really want to see this support getting tested again and again. So maybe at some point this gets broken, because I don't really like this retest on this area, because the main thing that I don't like is the fact that we have that double bottom that hasn't gotten broken. But the positive thing on one side is that although on Coinbase we didn't really see those lows get swept, because usually whenever I see a double bottom, I do want to see those lows get broken even by a little bit. On some other exchanges, we did get below those lows, and that's another also big signal for a bottom. So once you see those lows get swept, so you get an SFP, a swing failure pattern, then it's very good that you pay attention to, let's say, the perpetual futures, perpetual swaps, because they are the ones that usually do that kind of behavior, because spot prices are a little bit more sensitive. They don't crash as much. They have more spot buyers, so it's usually the capitulation comes from the futures and the swaps rather than the spot buyers. So in crashes, maybe the futures lead the crash rather than the spot market leading the crash, which is something we need to be aware of. So although it didn't happen on Coinbase, it did happen elsewhere. So let's see a few examples of those crashes. So BitMEX, that did happen. Maybe let's look at the Deribit swap. That also did happen. Although again, it's not a massive wipeout of those lows, so we didn't really go much more below those lows. We did actually go lower. Binance perpetual swap, these are the coin margin swaps, because these are the ones that people trade with Bitcoin as collateral, not with USDT. Maybe on some with USDT it did happen, on some others it didn't happen. So for example, if I remember correctly, on FTX only one of those lows was actually broken, not both of them. On some other exchanges we can see, like maybe on Huobi, a similar situation. Maybe Huobi did come slightly below them. So that's the positive sign. However, we have seen this happen again on some exchanges, or some drops, maybe like this one or this one right here. So on the 18th, we did have a little break of that low on some exchanges, which actually led into a little pump. Let's see if this actually gives us a good example. Let me find one so that I can tell you guys which one actually showed us. Yep. So on the Binance perpetual futures, we did have a little swipe of that low. So when you see such a thing, you do expect at least a little bounce. So maybe you can even aim right at those lows, maybe slightly above them, to just be sure you will get filled, and then just let the market ride it. So this could be also a little bit of your target. Now again, I'm not really happy with those lows, because I kind of feel like although they have been broken on the spot price, they will eventually get broken. They've been broken on the futures, so the swaps, they will get broken on the spot price as well, but in a more proper fashion, with a proper big drop and a larger correction in the future. It might take some time, but like you saw here as well, although in this situation, yes, we did have a lower low in this case, it was actually followed by lower lows on the spot price as well. And I think this has happened on several other occasions. You can see it many times over and over again, because once that happens, yes, so you do get the initial relief, because all the people that were about to get stopped out have been stopped out, so there aren't that many more longs to destroy in a way. However, that doesn't mean that the market has bounced because it's very healthy. Although yes, those liquidations have wiped out people that didn't really want to get stopped out, don't forget that this has been a big blow into the confidence of crypto. Again, I'm not saying this is the mega top or anything like it, because I'm expecting a further bounce at some point fairly soon. Even though we might go lower, at least for now, I would be expecting some continuation to the upside rather than to the downside. So far guys, and I'm gonna wrap this up and then I'm gonna do some other videos, so that it's already getting quite long, so I don't wanna waste too much of your time in this one. So remember, you can look at the moving averages, you can look at the pivots, you can look at, what happens with the futures, the difference between, let's say, the price of swaps and the price of spot markets. You can be looking at some of those key double bottoms. You can be looking at those measured moves like I showed you earlier. You can study the classical patterns. Although you can just see that once you have something like this, guys, maybe you can even call this, let's say, even though it doesn't really look like it, at least exactly like one, you could even call this a head and shoulders pattern, okay, where you have that little shoulder here, you also have the head right here, and then you have that other little shoulder. But it doesn't really matter as much, because once you have something like this, like a proper reversal of a support that gets tested many times, sometimes it's just good to just have an idea of where that movement might be going by measuring the height of that pattern and then kind of projecting that into the future and kind of see where the price might be heading next. And overall, like I said before, you can see that all these things, all those flash crashes, once you see them, you kind of know that maybe there is a bigger one coming, because if you have flash crashes right here, then it does mean that there is too much supply, something is not right, and for that to be resolved, it will probably take another flash crash. So now that I've had 3, potentially it's probably over. I don't really believe more people will be shaken out, because how many more can you shake out? And we're going to study the statistics later on with long short ratios and other stuff. I'm also going to do some TA on some similar TA on Ethereum and other altcoins, or maybe just overall the market in general. And in the next videos, I'm going to be looking at the fear and greed index, the longs, some similar indicators that we looked for the bearish scenario, for the topping signals like the NVT, the SOPR and other stuff like that. I'm going to look at the stablecoin index ratio. Then I'm also going to look at some stuff like open interest, the volatility of the market, so the Bitcoin volatility, how you can use that. And overall, I do believe these are more than enough tools for you guys to have enough tools in your arsenal to look for those corrections and where to spot the bottoms. So once again, remember moving averages, pivots, and the futures and the perpetual swaps. Now on the next one, the one that I forgot to mention is that I'm also going to look a little bit at the CME futures, because I didn't talk about them in this one. We've already talked about too many things, so I'm going to go for that on the next one, because I do believe there are some interesting things in there as well. And finally, the last thing that I would talk about is some stuff regarding the long and short ratios, but regarding the differences between the spot price and the futures price. I'm just going to go a little bit more in depth on how to spot the bottom using those spreads, those differences, that difference in the basis between the spot and the perpetual swaps, or maybe even the futures, because they're two different things. I've mentioned that many times. I've made that mistake many times as I've been speaking right now, and it's just something that in my opinion is something very crucial. It's something very helpful. It's something that can give you a lot of insight regarding where the market is going, because these differences are pure signals, guys. They are not perfect, but for example, like I spoke in the first video, when the OKX premium was about on the quarterly was about 10-11%, that was a topping signal. So you can imagine that once those futures have a 5 to 10% or even 15% discount, this could be a nice situation for a bottom, nice signal for a bottom. So once again, guys, thanks a lot for watching. Please remember to like, share and subscribe to the channel. Please press the bell icon so that you can get more videos like this. If you enjoyed it, leave a comment down below. Tell me what you liked, tell me what you didn't like. And of course, remember, you can follow me on Telegram, you can follow me on Twitter, you can follow me on TradingView as well, where I put some short analysis on there, so you don't really have to wait and watch for a video like this in the future to get my insights. So once again, guys, thanks a lot for watching, and I'll see you on the next one.